little bit of a flip-flop for the equity markets yesterday, if you will, those jagged edges. We closed in absolutely flat. Yes, 23,800 is being talked about as the line in sand, but I think the key trigger point is the FII buy figure yesterday. What a thumping number it is, and I think that in itself is a telltale sign that not just 23,800, we're headed for much, much higher levels in trade. So don't go by that iffy move that the market saw yesterday. That, of course, is some naysayers, the expiry as well, which is going to be at play. But suffice to say that the weak hands would be out of the market as of yesterday.
So we are looking at a world where the surprise on the positive side. US President is saying tariffs are coming, but they would be reciprocal in nature, which is that you put a tariff on me, I'm going to put a tariff on you. You've not put a tariff on me, I will not say hello to you. So the fear that tariffs are coming and it's going to change the shape of the world, that fear which in a sense had really enveloped the financial markets 2-3 weeks ago, that surely seems to be getting diluted. For me, if I looked at the global headline, there is no news, but the news on tariff. And this time the news on the tariff is actually helping US markets more than emerging markets, which is that Nasdaq is up for 2-3 days. US markets from Thursday's low, S&P and Dow, they've come up quite a bit, all because of the tariff, tariff communication, where it appears that the tariffs would be much more dilutive, they would be sensible, and we could not be in for a nasty surprise. So this could be by the rumor. It really could be assumption, but yeah, for the moment it appears that the fear around tariff seems to be genuinely getting diluted.
Yeah, and I think the cues are really out there. The US consumer confidence, though, has plunged to a 12-year low. When you talk about the global data points, Fed officials are flagging slowing inflation progress now. The 10-year yield is now lower on account of those consumer outlook data. And just want to revisit what the handover has been like from the globe. Irrespective of that, like Nikunj said, it seems that the tariff fears have somewhat subsided. The street has already baked that in, perhaps. The S&P has managed to notch a 3-day consecutive winning streak, closing in mildly positive, but up in the green regardless. It was flat for the Dow, but with a marginal positive bias. And the Nasdaq was the one which outperformed about almost 0.5% higher. Asia picking up pretty much the same sentiment. Hong Kong is holding up nearly 0.5%, while it's flat for Shanghai. Japan as well is higher by over 100 points. And that, of course, gets us back to our markets, wherein we've managed to now hit a 2-month high, and we've managed to pretty much erase off the losses.
I mean, just think about it, Aisha. We are in positive for the year. And, my eyes lit up when I saw that data. Yeah. For the year, even positive? Correction kahan tha? What were we crying for? So that's the reality, that we have actually knocked off, or we've recouped. Knocked off is not the right word. We've actually recouped whatever we lost, and Bank Nifty is actually at the highest point of the year. So look at the Bank Nifty and the Nifty. The outperformance in the Bank Nifty, I think, really seems to be quite extraordinary. So we've discussed where we've moved from, right? It's positive for the year. I mean, which means if you bought the Bank Nifty at the beginning of the year also, you're actually making money. Where do we go from here? So what are the factors at play? And short term, what is there, Aisha? There is FNO expiry, Thursday, monthly expiry. There's year-end compulsion. And then there is this whole talk of 23,800. Yeah, I'm just trying to put the numbers here. So these 3 technical factors would be at play. The rollovers are low in the Nifty, but not in the Bank Nifty. And there is still some short left in the system. So that, I think, in next 2 days will happen. 23,800, if you cross that convincingly, then yours truly, Kunal, and everybody will clearly make a case that you have to create a fresh bias. I don't know whether that will happen or not, but chances of that happening on the higher side, I think is there. And third is this FI comeback. So Aisha, FIs, when they come back, they don't come back for a day or two. I mean, when you come back in this kind of with this kind of an quantum, it's a choice which you've taken to come back to emerging markets and within change India allocation. These allocations, when the selling started, it lasted for months. I mean, it lasted for almost a year. When buying comes back, the quantum could vary, but it's going to be a trend in making. So what are we staring at? We are staring at FI buying, DI not selling, retail coming back and a bout of short covering. So if 23,800 on the Nifty is taken away, and if you have a good FNO expiry because of short covering, then I think we could extend our gains very easily. So the same theory, stay in the market. Don't book profits. If you endured the pain, now go for the gain.
If you like this video, then like, share and subscribe to ET Now.